Welcome to the Q4 FY18 earnings call of Carborumdum Universal. The management today is being represented by Mr. Qtr4, Managing Director, Mr. Padmanathan, Head Accounts and Taxation, Mr. Raja Mukherjee, Corporate Communication and Internal Audit and Strategy. I'll now hand over the call to Mr. Srinivasan for his opening remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Yeah. Good morning, all of you. It's been a good year for us, 17-18, and hopefully should be a beginning of better years to come. Consolidated sales for the full year increased by 12% to 2,330 crore from 2,080 crore. This is, of course, for normalizing after the GST excise thing. This was driven by better performance across all segments. Standalone also grew by 12%. All the shifting of projects, recommissioning have all been completed and they're all running to full speed except the bubble plant. I'll touch about it a little bit later. Consolidated profit before tax increased from 262 crore to 322 crore. Profit after tax at 216 compared to 175 crore last year. Abrasives consolidated level sale at 1,018 crore compared to 938 crore was a 9% growth. Standalone also grew by about 8%. It went up to 860 crore for the year. Coated, we are running near flat out. Bonded has been running well, but we still have capacities available. The abrasive business in Russia and other parts of the world has also picked up. On the electro-mineral side, consolidated sales at 883 crore compared to 749 last year, driven by strong growth in Volzhsky abrasives. Standalone also had record growth. We increased to 406 crore from 318 crore. Prices are going up, but input costs are also going up. I will touch about it a little bit later. Russian Volzhsky ran 10,000 tons higher than the last year, which really gave us a significant growth. They had a 19% growth on top line and near 38% growth on the bottom line. So that was a very good year for Volzhsky. Foskor Zirconia had a bad year, particularly a bad quarter. We did a couple of things. One is we wrote back all the inventories to the new value of the Z450. Consequently, we did take a hit. We also didn't create any deferred tax credit, so we took almost a hit of 12 crores in the last quarter at Foskor Zirconia. The Zirconia bubble plant in India also was not running flat in the last quarter. Consequently, the depreciation hit we did take, and that both showed up in the consolidated margins on the electro-mineral side. As far as ceramic is concerned, consolidated sales was 11% higher at 502 crores compared to 451 crore. Standalone grew by 9%, 401 crore compared to 369. The met cylinder plant, which we shifted from NGK, is commissioned, and all acceptance by key customers has been completed. We will see rapid scale up in Q1 onwards. CAPL Australia did well. They had a 10% growth, and Volzhsky refractories also did well. The refractory business in India was muted, and that's the reason why the overall growth was only 11% in this segment. In terms of capex, we did 57 crores on standalone and 92 crores on consolidated. Most of it is largely committed capexes, which we completed. Significant investments into the R&D part of it is continuing, and that should come to our help in the ensuing quarters in terms of further growth. Now I'll request Raja to take through the financial part of it.
Thank you, sir. Let me now summarize the financials for full year basis. At a overall level, our sales increased by 250 crore, which is 12% growth. PBT grew by 60 crore. Out of this sales increase of 250 crore and 60 crore increase in PBT, standalone sales increase was at 169 crore and PBT gain was at 32 crore. That means subsidiaries and JVs contributed to 82 crore of increase in sales and 32 crore increase in PBT. Standalone PBT gain of 32 crore came by way of lower finance cost of 7 crore and a higher volume of around 25 crore. The entire subsidiary JV sales and PBT increase of 82 crore and 32 crore respectively was contributed by Volzhsky. Volzhsky Abrasive Works sales and profit grew on account of higher quantity sold at the rate of 10,000 tons is what they have done in this year against last year. If you go to segment for abrasives at a consolidated level, the PBIT increased from 113 crore to 132 crore. Almost the entire growth in the profit of around 19 crore came by way of standalone performance on the back of higher volumes. Coming to electromineral division segment, the PBT gain was around 36 crore, out of which QME India contributed around 11 crore, which again came on the back of higher sales. Volsky gave a gain of around 42 crore due to significantly higher volumes. Of course, Foskor had a loss owing to increase in electrode pricing and a lower top line, which we'll explain later. As far as ceramics is concerned, ceramics had a 5 crore gain in operating profits, which was contributed by 3 crore of the gain owing to better volumes from the standalone business, both IC and SR. Was refractory business and CFL had also gained. In terms of debt equity on a standalone basis, the debt equity ratio was at almost nil at March 2018 as against 0.01 as of December 2017. The total debt on a standalone basis decreased from 9.2 crore as of December 2017 to 1.81 crore as of March 2018. The entire borrowings were financial leases borrowings. On a consolidated basis, debt equity ratio improved from 0.09 as of December 2017 to 0.08 as of March 2018. In March 2017, it was 0.11. The total debt on a consolidated basis was at 129 crore, and the breakup for it is long term is around 7 crores and the current maturity is at 4 crores. Short term was at 118 crores in March 2018 in comparison to the position as on December 2017 where it was at 134 crores including external debt. As a standard practice, we would like to give a forward looking guidance, so we would like to make the statement saying that during the call we may make certain statements which reflects our outlook for the future or which could be construed as a forward looking statement. These statements are based on management's current expectations and are associated with uncertainties and risks more fully detailed in our annual report, which may cause the actual results to differ. Hence, these statements must be reviewed in conjunction with the risk that the company faces. So we now open the floor to the Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Neera Prasad from B&K Securities. Please go ahead.
Hello, sir, and thank you very much for the opportunity. My first question pertains to your guidance for FY19 and overall, as you had stated, that the existing asset base can generate revenues of around 3,200 crore rupees. So based on the current scenario, do you think this number can be revised upwards and your overall outlook on the business, if you can please help?
Yeah, as far as F19 is concerned, we expect that we should be definitely around the 2,700 crore plus range. We'll have to see quarter by quarter. Like you know, there is a certain amount of volatility still in the input costs and consequently our pricing. If you are able to push up prices, this number can get even better. There is investments already in place, like I said, for the 3,200, and during this year, we will make further investments to take it forward from there.
Mm-hmm. So any capex number that you can share, because relocation capex is already done, and as per my understanding, only the maintenance capex would be there. Are we planning to add new capacities, or like how would that be?
See, for doing the 3,200 crore, the capex is already in place and it's completed and running. What we really expect to do during the course of this year, we have taken a budget of about 150 crore. This includes a new coated maker, which will take almost 18 months to be installed and commissioned. And it will also have other capacities that comes up to take it beyond the 3,200 crore range.
Mm-hmm. So you said the number was 115 crores, right? 150
on a consolidated basis. It also includes the gas-based power station that we want to put up in Russia for about 12 megawatts.
Yes. And sir, can you help me performance of Volsky absolute in Indian rupees?
Yeah, Volsky, I will give you in Indian rupees. Give me a minute. Yeah. So,
Okay, that's in ruble.
Okay, Wolski, you can take it as in Indian rupees. We did for the full year 565 crore top line compared to a 453 crore last year. And post-tax profit was 90.38 crore this year compared to 62.14 the previous year.
And sir, on the pace of price hikes, can you add some qualitative comments as to when you are negotiating the price hikes with your customer? In what range you are able to get these price hikes? And in FY19, out of this 2,700 crore rupees of revenue that you are targeting, what contribution can be from the volume and what contribution can be from the pricing?
To give you an example of how it has played out so far, out of the 8% growth in standalone abrasives we got, the price increase would have been less than 2%. So I would say the price correction has been less than 20% of the total growth. It is also about the same in Russia. We got a 19% top line growth and the price impact was about 4%. So really we're getting between 20-25% of the total growth as price increase. Now we expect this to go up to about 33% because of the very high inflation in the input costs. So if you can get to a growth of about 15 to 18% as an overall growth number, our price increase should be in the range of about 5%.
Thank you very much, sir. My queries have been answered.
Thank you.
Thank you. The next question is from the line of Balchandra Shinde from Anand Rathi. Please go ahead.
Good morning, sir. Sir, regarding electrominerals also in standalone electrominerals, we have seen relatively lower price increase, or it is a more a factor of higher price increase in electrominerals in standalone?
The price increase have been coming in, but we have not been able to completely cover the growth in costs. So to give you an idea, the power cost has moved up per unit weighted average cost from 4.7 to 5.4 rupees per unit in the standalone part of Carborumdum. A significant part of it would actually go into the electrominerals because that's the largest power consuming part. The power cost itself has moved up so significantly from 77 crore to 101 crore as far as standalone itself is concerned. All this has not been completely recovered from the market, particularly on the zirconia side. While the other parts, the volume growth, etc., has helped to improve the margin, we've seen a margin improvement, but it's not been as much as we would like it to be. The margins have moved up from 9 to 10.2, but we really would like to see it move to about 14 or 15. So really that has to be coming from a price increase.
So in future we will take further price increases?
We are continuously taking a price increase, but it's a battle. It's not going to be easy. Customers are fighting every bit of it, and which means that we have to keep both going. We have to keep the volumes running, otherwise the plants would suffer, and at the same time prices would all have to go up.
And sir, regarding bubble zirconia, as you said that it didn't at the mark in fourth quarter in FY19, how much kind of revenues we expect to generate through bubble zirconia?
The overall zirconia business is in a bit of a transition. The biggest impact has been in Foster zirconia because they live only with the zirconia business. The zirconia prices today in the world market is lower than the cost, which means that if you make the zirconia, you lose money. That's really the story that's happening on the zirconia side. The only way this can be surmounted is one, significant price increases. To give you an idea of the scale, zirconia uses almost about 7,500 units of power per ton and consumes almost about 160 kilos of graphite. Both have gone up. Power has gone up, graphite has gone up, sand has gone up, and they have gone up in multiples. And the price increase that the market is willing to give is only a few percentage points. So consequently, it loses money if you make this material. The only way around it is to go to the Z450, which is what we are working on. But having said it, we have taken in Foster the hit by saying that we have marked down all the inventories to the current market prices, which is why we took a near 12 crores hit in the profits in Foster in the last quarter. We expect two things to happen. One, the market should get stronger with the Z450 model. Plus, prices should also go up. Both this together will take up the margin.
But how much expensive Z450 as a product will be as compared to normal zirconium products?
The Z450 would still give you a profit margin even at the current price point.
But if you can give the comparative expensive, I don't want exact prices, but if a normal zirconium product is 100, how much will be the Z450 product?
I would not give that as an answer because the number of customers who buy this is very few. So it's not in anybody's interest for us to get so detailed about it. But let me tell you that it consumes 1/3 the electrode compared to the normal bubble zirconia. So consequently, there is an advantage, particularly with the electrode prices being what they are. So that is where the advantage would come from.
Mm-hmm. Okay. And so regarding our synthetic graphite approvals, where we are exactly placed right now and by when we expect to start the production?
I think there is some amount of miscommunication that's out there. I also see it in the digital space. The Z450 is a way to consume less graphite electrode, so that has nothing to do with synthetic graphite. There is a separate project of making graphene, making high quality, high grade graphite, primarily targeted at the battery manufacturing companies. And that's a very basic project that is running at this stage. It's not commercially scaled up yet. We are only doing alpha beta testing, and that is today insignificant in terms of top line.
Okay. Okay. And sir, regarding ceramics and refractories, especially in the Australian side, how you see overall outlook of the business, and even on the Indian side, means where we see in FY19?
We had mentioned in the beginning itself that the Australian business grew by about 10%. It will continue to grow 10% plus. There is a strong growth in the mineral market globally, so they will continue to grow. As far as the ceramic business in India is concerned, again, the METS project will continue to run to capacity, so you will see volume growth in that as well. The refractories is picking up. We have had a long period, almost about 4-5 years of poor sales and poor margins in refractories. But the refractories are picking up, again, coming largely on the back of growth in steel making and other things. But you will see a far less significant growth from refractories compared to the ceramic. Ceramic is doing very well and will grow further.
If you can buy...
I'm sorry to interrupt, but maybe request you to come back in queue for any follow-up questions. Thank you. The next question is from the line of Ashutosh Atsare from Sharekhan Limited. Please go ahead.
Yeah. Hello.
Yes, please go ahead with your questions.
Yeah. Good morning, sir. And congratulations. Yeah, and congratulations for good set of numbers. So just one question. So how do you see the spread between realization and margins to pan forward? Like you would be easily passing on the pricing, but on the cost front, how easy or how difficult is to control the cost, giving power costs going up, other expenses going up?
That's a real tough question. So I'll take it like this. It is not easy to put up prices because we have contracts, we are doing our best. There seems to be a lag, and in some cases, customers would find it extremely difficult to give us these increased prices, so we have to come up with a differentiated product. We are working on that as well. As far as cost is concerned, some part of the cost gets mitigated as soon as we have more and more internal power generation. So our cost of power is a weighted average of various sources from which we get our power, our own power stations at Maniyar, our buying from trade, our grid power, etc. We try and work on this. If we have good rains, then we tend to get better power averages. Last year was a pretty bad year. The year before was even worse. So let's see how it goes as far as the power cost in domestic is concerned. In Russia, first quarter actually we had a small benefit in the power cost because that's seasonal a little bit, because when they have the winter coming up, they're able to sell the steam, and consequently the cost of power comes down. So it went down from 2.56 ruble to 2.5. So that's a small benefit that we had in a quarter. But generally we have to accept that almost all input material, power, petcoke, zircon sand, graphite electrode, alumina, bauxite, everything is getting more expensive, and that's a way of life. The only way we can try and get better is to be more efficient, which is what we are working on. And the rest of it has to come from increased pricing.
Okay. So the second question is, if I'm correct, in FY18, your net working capital has increased substantially from year-on-year basis.
It has overall gone up on a standalone by about 60 crore. More than half of it really is from the raw material side, which is a bit of a conscious decision considering the kind of volatility we are seeing in the input pricing. And the other half has come up from receivables. All of it is good. Significant sale in the last quarter. Volume is what has pushed it up. We are quite comfortable with it. I mean, it's nothing unusual. Number of days wise, our receivables are still within the same as previous year. The big growth, like I said, is a conscious decision to hold a certain amount of raw material.
Okay. That's it from my side. Thank you, sir.
Thank you. The next question is from the line of Abhishek Agarwal from Prithvi Finmart. Please go ahead.
Hello.
Morning.
Good morning, sir. Sir, my question is regarding GST things. How the demand is looking post GST? Because last few quarters we are struggling because of GST things in the counter sale part. So how is the scenario right now?
It's a good question. Let me answer it like this. So far, GST has had no major positive impact on the distribution side. We are not seeing anything substantially good happening because of GST. So it has to still settle down and come to play. What we also see, particularly in the last quarter, which is really the Q4 number, and I can see it happening as well as in April, is that with the e-way bill coming from April, probably things should get better, but it will go down before it goes up because there was a significant amount of pre-e-way bill buying in the last quarter. And this, I believe, is for all industrial consumables. And as the trade winds down with that inventory, things should get better, but it has to play out yet.
Okay, sir.
GST is not going to be a one-quarter story. I think GST has to evolve over a period of time. It's still a very confusing thing, and people are battling with it.
Okay, sir. And so one more thing, as you said, that around 20 to 25% growth come from the hike in the price, okay? And in the future also, as you said, that 30 to 35% another growth will come, okay? So can we say that like this, as the growth will come in the pricing, our EBITDA margin will improve from here?
See, our consolidated EBIT margin or PBT margin is 13.2, which went up from 11.7. The EBITDA margin is 18.1 compared to 17.2. We expect it to continue to get better. It'll improve quarter on quarter. It will be a combination of pricing as well as efficiency.
Okay. And so last question, like companies, every year if you see companies generating free cash flow of around 250 crores to 300 crores. So where we'll deploy? We'll keep doing some expansion or what we'll do with this internal accrual?
We have to do expansions. We have to do potential good M&A. But on a shorter term basis, this year the board was mindful of the fact that on a consolidated basis, we are actually working short and long term combined. We are minus 56 odd crores. We are actually sitting with cash. So the board did decide to pay a record dividend. I mean, we are having the final dividend was another 1.25. So the total consolidated dividend this year is 2.25, which is probably the highest that we are paying. Hopefully, as ideas come in, we will have more money spent on growing the business as well as paying higher dividends.
Okay, sir. Good, sir. So that's for my answer. Thanks a lot.
Thank you. The next question is from the line of Ujjwal Shah from Quest Investment Advisors. Please go ahead.
Yeah, sir. Thank you for taking my question. So just wanted some more clarity on the abrasive business. We were expecting some amount of growth from that business to come in, but the growth has eluded till now. So can you just share your thoughts? How do we see abrasive standalone, especially how things will pan out over there?
Abrasives has grown 8%, which is probably one of the better years going in the last 4 or 5 years. it is still largely a consumption-driven growth. There's no major capex or anything happening. The GST-driven growth is still elusive. It's not happened. Margins have moved up. If you see quarter on quarter, in a 1 year period, it's moved from 11.5 to 13.9. So there has been a significant growth in margins in terms of what's happening in abrasives. We will see growth in the next quarters. Like I said, with the e-way bill, etc., coming in, I think the GST impact should start biting, in which case you will see consumption as well as margin growth. Abrasives is going to be a very India-based story. 75% of our business comes out of India, and so we have to see the Indian economy picking up to see very significant growth.
Right, sir. And so on the electromineral part, so on the Foskor side, have things been completed totally? We might not see any further hits in the upcoming quarter. And in terms of margin guidance, if you can give us some guidance on each of the business, where do we see the margins heading in FY19, if you can, please?
Like I said, the overall margin, EBITDA is 18.1. If you take only segment-wise, I think abrasives, like I said, average for the last year was 13. The quarter alone was 13.9. So really, the last quarter, if it's a trend, you should see improving margins coming in abrasives. Ceramic margin, I would be careful. We are at about 15.1, and I think it will continue to be around 15 to 16. It will get better as the industrial ceramic part grows faster than the refractories. The electromineral story is where the margin hit came up from the Foskor thing, in spite of Volsky doing extremely well. We are on a full year basis around 14.4. I expect it to move towards 16 to 17 as we go forward.
And that would be in next 2 years?
At least in next 3 to 4 quarters, yeah.
Great. And so on the Foskor side, is the hit been completed in 4Q, and we might see?
I wouldn't say that. We have done our best to write down all our inventories to the price at which we can currently sell the product. The top line has to grow, and the Z450 has to take up. Unless the Z450 takes up significantly, like I said, making the bubble or making the normal zirconia, you'll actually put out cash. So this is something which we have to play out in the next 3 quarters.
Sure, sir. And lastly, sir, your guidance on WOW Russia for the year ahead, and
so it's done well. It will continue to do well. There's no uncertainty about Russia. Whatever we are reading about sanctions doesn't affect us, and it's pretty good.
Okay, great, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Palchandra Shinde from Anand Rathi. Please go ahead.
Good morning, sir. Sir, regarding med cylinders, if you can specify any potential revenue which we are targeting in FY19 in ceramic segment.
We said we will be above 100 crore this year in that, when both the plants running flat out. I think we would stay there.
Okay. And profitability-wise, will it be at the similar levels of ceramics, or it will be better?
I have very limited customer in this business, so I would rather not answer that question.
Okay. And sir, in WOW, last year we did around 77,000 tons. So this year we did around 87,000 tons, right?
See, last year, the actual external sale, we have to do 2 things. One is what we use and what we sell. We did about 68,000 tons of sale. This year, we have sold 78,000 tons. So that's a 10,000 ton that impacts the top line. The rest of it, we also consume it for our own refractories and a small quantity for our internal grinding needs. So I leave it out. Actual, what we put out in the market jumped from 68 to 78. Okay.
And sir, now what will be our capacity? Because I think we were working on debottlenecking.
We are well above 80 now, and we will continue to do our best to see how much we can go up.
So we were targeting around 90,000 tons. By when we'll be able to achieve that capacity?
We said 2 years, we should be there.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Ruchir Khare from Kotak Securities. Please go ahead.
Hi, good morning, sir. Thanks for taking my question and congratulations on the bottom line growth. Sir, my question again sir, pertains to the abrasive segment. So I'm sorry to press on this, but now sir, GST has been here for some time and we haven't seen the results as per our expectations. So what, from where are you drawing the confidence that, sales could further grow up even substantially from the current levels? So what's going to change in the real scheme of things, sir?
It's a tough question to answer because how GST is playing out, all of us are guessing. What we did realize is that there was practically no impact of GST implementation for almost almost to the last quarter of last year. We are hoping that from first quarter with the e-way bill all coming, that there will be far better compliance and we should see some impact coming in. Let's give it some time because it's difficult to judge, and anything you say here would be very, let's say, it's guessing really. We'll have to wait and see how it moves.
Got it, sir. Sir, in the ceramics part of the business, from where exactly demand is coming? I mean, what are the key drivers today for this business?
The industrial ceramics sells to a wide spectrum of high-end engineering customers, right from solid offset fuel cell to metallized cylinders to parts that go into the EVs, etc. And I think it's coming from across the board from all segments. Strong demand. Also, the traditional wear ceramic, which goes to the mineral processing, also is picking up. What is not picking up is the power station-related project. That is not picking up, but all other things are doing well.
Okay, fine, sir. So, and sir, lastly on silicon carbide, so what's your outlook on the prices of silicon carbide? Because we've been reading few reports which says that there are some plant shutdowns in China. So I don't know how to relate this because number of players are still not limited in this business. But what's your overall opinion or outlook on the silicon carbide part?
All fused minerals, be it zirconia, white fuse, brown fuse, silicon carbide prices will continue to go up. It is driven on the back of graphite prices, power costs, as well as capacities being taken out in China. There is a significant demand increase and there is no corresponding capacities coming up. On the contrary, existing capacities are being taken out. So consequently, prices will go up significantly.
Fine, sir. Thanks, sir. Thanks for taking my question.
Thank you. The next question is from the line of Kashyap Pujara from Axis Capital. Please go ahead.
Yeah, thank you for taking my question and congratulations for a good set of numbers.
Thank you, Kashyap.
Yeah. My question was largely related to, operating leverage drivers. So if you actually see, if one were to, remove the Volsky from the numbers, then probably the rest of the business is around 200 crore PBT for the year. And there are sufficient portions of the business which can scale up substantially, driving further operating leverage. So could you actually, run us through which are those segments in your mind where we see significant improvement in the next 2 years or so? So, for instance, you said refractory was muted, abrasive price increase could yet happen. We are still at only 8% growth. NTK has just been commissioned. So could you just run us through a sequence of where we see operating leverage coming from?
Okay. So let's take segment-wise. Abrasives, I think overall there is still a lot of headroom for growth. Our capacity utilization in bonded is still only at about 65-70%. Coated is running much better. So there is both a leverage available as well as a price opportunity available in that business. You will see that playing out in the next 6 quarters. Hopefully GST really getting implemented from April should help us. On the electro-mineral side, I think the bubble plant, which can, depending on what mix we run, whether it's the Z450 or the any other grain, can give us another at least 4,000 to 6,000 tons. And that is something which can make a big difference to the operating leverage and the top line. That is still there. We're doing nothing with it. The rest of the plant is running reasonably well. On the ceramic side, like I said, you will see most of the benefits kicking in this year as the metallized cylinder plant runs flat out, the other plants all run flat. Refractories, we still have a lot of headroom for growth. Capacities are in place. So there we should see some operating leverage. overall, I would say on a standalone basis, you will see both top line improvement and margin as we head towards the 3,400 we are talking about. And that should happen in the next, if everything goes well, 4 quarters, otherwise 6 quarters. Let's see how fast it goes.
Sure. And lastly, on the Volsky one, given that while we are running it flat out and we saw great gain there, but now that, abrasives are picking up there and you are putting up the gas-based power plant captive, so what kind of incremental margin expansion that we can see there, given that volumes will largely remain flat?
Volume margin expansion from the current level is not going to be easy, because I think you will find that we are already running it at a fairly high margin. What you will see is there will be incremental improvement in capacities. We will use the abrasive, which is relatively small business, higher. We'll use the refractories more. We will get a few thousand tons more of silicon carbide. We will get better product mix. Overall, you will see a combination of top line growth and along with it, the same margin, ratios maintained, but still you'll see the bottom line will go up.
Sure. And my last question to you would be that, we are going to be throwing up a significant amount of cash in the next 2 years. Even if we were to pencil in 100-150 crore capex per year, it would still be substantially cash generative. Now, while we understand that 3,200 to 3,500 crore top line you could deliver from the current facility, but I'm more interested in what next from here, given that we have significant cash accruals coming up. Then, say if one were to, glance beyond FY20, how would we, see Carborumdum Universal go to?
This is where we mentioned in the beginning about the R&D effort. I think there are quite a few newer opportunities coming up. Some of it would be organic investments, which could take a longer time, maybe 3-4 years to scale up. Some of it could be potential M&A. Today, whatever we are looking at is all pretty pricey. We will not do anything dramatic, but we will keep looking at things. And I believe there is still a lot of activity that's being put in place to take the company beyond the 3,200 to the 5,000 crore mark in the next 3 to 4 years.
Sure. Okay. Thank you so much and wish you all the best.
Thank you, Kashyap.
Thank you. The next question is from the line of Vinod Chari from Dolat Capital. Please go ahead.
Yeah, good morning, sir. Thank you for this opportunity. I wanted to ask you something that you mentioned at the beginning in your opening remarks, where you said India has slowed in growth. So which all areas do you see slowdown happening, and when do you see some kind of a recovery happening in these verticals?
I don't know whether I use the right phrase. I think India's growth has been relatively slower, particularly on the capex side. There is a consumption-driven growth. But we see huge growth, both in, again, largely consumption-driven in Europe and America. You can't get a capex equipment out of Europe in the next 8 to 10 months. That's the kind of order backlog they're all looking at. So there is a big demand-driven growth across the world. That should actually drive consumption up. Now, the capex cycles are really not there yet. So you are seeing small capex happening with the MMS, there's medium and small companies in India, but big projects are still not there. So you're not going to see a big power station coming up or a new steel plant. So consequently, the refractories and whatever we do towards the major capex, that's not happening. But consumption is strong and we will see growth. And that's what we believe, which is visible for the next at least 4 or 5 quarters.
Okay. Well, when do you see recovery in the capex cycle happening?
Tough to judge. Very difficult to judge. You see, most of whatever we are spending, and it's also a little bit of global story here, and I think people are also worried. I'll give you only one example. If you look at the automotive side, it's very difficult to judge anybody is going to put up a new crankshaft line or an engine line in Europe or US at this stage. People probably run the existing lines flat out, and they're all running full, and they're trying to buy more components from elsewhere. But it's difficult to judge anybody is going to put up a brand new line, because there is also disruptive technologies which is always being talked about. And in that context, it sort of puts a little bit of a scare on people in terms of committing to big capex. Same as the story in power stations. We're going to run more power stations flat out rather than putting up new stations. So I think it's going to take some time before the real serious big capex are going to happen, at least in the traditional industries.
Mm-hmm. And the same would apply to India, you think?
I believe so.
Okay. Okay, thanks a lot.
Thank you.
Thank you. The next question is from the line of Ritvik Sheth from Deep Finance. Please go ahead.
Hi. Good morning, everyone. So just a couple of questions. So firstly, has the increase in raw material prices stabilized or halted, Because in the last couple of quarters, they've started increasing significantly. So I wanted to have a sense on whether they've stopped rising now.
Simple answer is no, it's not stopped rising, and it's not only not stopped rising, but you're seeing some kind of unusual volatility. I will explain just as one example. We had alumina running at about $420 to $450 a ton, which is a basic raw material used in the metal aluminum industry, but that's also a raw material that we use in our white fuels, in our refractories, in our ceramic, and a whole lot of things. Right. And when the Rusal sanctions were announced, you would normally expect that one of the largest metal makers, when they are under sanction, the alumina prices would actually drop. Instead, it went exactly the opposite direction. It went to almost about $680 to $690 a ton. And now it's sort of coming down a bit. So it's tough to judge what's happening and who's playing with it. But the fact is, it is all very volatile.
Okay. But has the pace slowed down or, some sense on that?
No, not really, because we're still seeing very strong volatility across, and that's the reason why all of us are battling with this.
Okay. And so on the Z450, what are the end users for this product? Like, who will be supplying to and where will be supplying to? Will it be globally or any particular geography that we are looking at?
Monoclinic zirconia is largely used in pigments, in the nuclear fuel rods, in refractory applications. It's used in ceramics, so it's used in a wide range of applications. And this Z450 would ideally suit for almost all these applications because one, it's far purer. Second is it's got a lower U plus TH. U plus TH is really what we have as a measure of radioactivity. The reason why we call it 450 is it's guaranteed to be below 450. Significantly below the international threshold that is put up. So there is a lot of positives about it. Any large input material, major transfer or change happens over a fairly long period of testing. People normally take at least 6 to 8 months to test and clear it. We believe we have crossed the hump. We should start seeing scaling up going forward.
Okay. So have you received any orders regarding the same?
Yes.
Okay. And that will start from Q1 FY19?
Yes.
Okay. And just one clarification, so I got cut off in the middle. You mentioned that from here on margin improvement will be slow and gradual, or?
I think margin improvement will be steady.
Margin for the company as a whole?
It will be steady.
It will be steady, okay. So we should work between 18 and 19%.
Yeah, it will get better and better. The EBITDA today is 18.1. It will get better from there.
Okay, great. All the best. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Bharat Sheth from Quest Investments. Please go ahead.
Hi, sir. Good morning and congratulations on good set of numbers.
Thanks, Bharat Bhai.
Sir, on this gas-based power station you said for this Vostki, so what time frame do we expect it up and how much capex that we have planned and what could be really a saving out of it?
We are planning something around 12 megawatt or even a little less. Okay. It should be up and running during this year. Okay. Because one is to get like I said, all capital equipment today, the deliveries are at least 8 to 10 months in Europe. So it's going to come from Europe and it will take us about 8 to 9 months to get it there. In terms of cost saving, today the power cost in Russia, like I said, is for us per unit is about 2.5. This would give us probably about 1.8. So that's the saving you'll get.
Okay. And how much would be the investment?
It's a 10, 12 megawatts, so we haven't really put out the numbers yet, so it will be within the capex. We're talking of less than 25%.
Okay. And sir, would like to, give some color on American business and abrasive side and Canada. How the things looks like, where we were,
The American business, there's nothing significant to talk about. It's around the same that we always had. About a 50 crore business, it's still about the same.
And are we making money or which we were earlier?
No, we are still marginally losing money.
And do we expect this year to turn it around?
Yes, we should. See, really, it's a question of getting the top line running. There are two parts. What sells out of QME America is about a 50 crore. We also probably do another 50 odd crore directly from the various units into customers in the US. So QME America has got a couple of roles. One is to put our flag out and say we are there. But all of it necessarily we don't sell through them. So the small loss that we make is acceptable because at least it keeps our brand running there. And there's a significant amount of direct sale that happens. A lot of customers still buy directly from us. So we will hopefully turn it around in this year.
Okay. And Canada side?
Canada is also sold out of US. We don't have a separate operation in Canada anymore. That we already closed and shifted everything into the US.
So you said on this synthetic graphite, which is, when we expect, timeline, to it be a commercial production, we expect to start?
You'll have to give us some time. Like I said, it's still very small. It's still at alpha and beta, so we will take some more time. We have not made any commercial investment yet on it. It's still a very small plant.
So on this coated abrasive side, we were doing a lot of, small project, to make more value-added product. So can you give some color on that?
The conversion plants in coated are running well. These are small capex, and this is all running well. That allows us to scale up and add value to the coated. As you know, coated, we are running it almost flat. We have done some improvements in our Calcutta plant, giving us some additional capacities, which will actually help us till we get our new maker running. That plant is running now well, and that will give us another about 3 to 4 million square meters. Hopefully, that will give us the time before we get the new maker running. Overall, coated is doing well.
How much is this value-added new product that we have developed and we are...
That's very difficult, Bharat. It's too much of a detail.
Okay. Thank you. All the best, sir.
Thank you, Ji.
Thank you. The next question is from the line of Sandeep Bed from Quest Investments. Please go ahead.
Good morning, Mr. Srinivasan.
Morning.
You mentioned that mid-cylinder ramp-up will happen this quarter.
It's happening every quarter. We will start hitting full plant capacity. We can do 1.8 million. By end of the year, we will be at that level.
And last quarter, what was the utilization?
The old plant is running flat. The current plant is running at about 30%, 25-30%.
Okay. And second, just an accounting clarification. When I look at our segment consolidated results, unallocated expenses in the last quarter, that is December quarter, was about 11.3 crores, while it's hardly anything in the March quarter. So just want to understand what is causing that, fluctuation. Is it forex or is something else?
Mainly, it is the debt coming down and the surplus being parked in the liquid funds. That is why it has come down.
So other income has gone up, and that is what is bringing it down.
Right.
Okay. Thank you.
Thank you. The next question is from the line of Charanjit Singh from VNK Securities. Please go ahead.
Hello, sir.
Hello.
Yeah, thanks for the opportunity. So you have talked about, the new product development and also our initiative, maybe, going forward to look at some inorganic growth opportunities. So if you can, just give us some highlights, in terms of how you are looking at these new product developments, which areas are going to be, our focus area for this initiatives.
Yeah. So basically, Carborumdum is the material science company. All the new products that we are looking at are around this space. We are looking at newer grains, newer raw material, newer processes that will give us to make different wheels. I'll give you a couple of examples which is in public domain. We have launched during the Grind Tech in Augsburg in Germany the new range of glass fiber bodied high-speed grinding wheels. We have also showcased wheels with sensors. We call them the IoT, that is the Internet of Things, where the wheels can actually are smart. They can talk to the grinding machine. They can sort of practically make the operator redundant. They're smart wheels. So these are the things that we are working on. None of it is at this stage saying that it's giving me top line or something, but these are the areas that we are working on. Similarly, if you look at in the mineral side, the Z450 is one part. We have filed a significant number of patents on the new versions of making zirconia for the metal composites. So that's another patent that's been put out. So quite a few areas of future-oriented activity that's going on. And as they become more and more commercially valuable, we will start talking about it more.
Mm-hmm. And so in China, we are seeing, last time also you had mentioned that there are a lot of capacities which are being shut down. So, sir, like, what is the kind of impact which we could see, in terms of the pricing, which we can get a better pricing, or which areas where we can, capture that growth from the capacities which are getting shut down?
The mineral-related area is where the Chinese businesses are being partially closed or partially upgraded to have better environmental compliance. You'll have to take everything with a pinch of salt. These plants may disappear for about 3 quarters. Suddenly they will come back again, etc. So there is a bit of a volatility in the global markets because of this. Whatever we have to build, we'll have to build it on a sustainable, stable basis that we can stay and compete even when these Chinese plants eventually may come back with some kind of a improved environmental compliance, etc. So that's the way we look at things. So we're looking at where we can invest, which will be inherently competitive. And that's the area we're looking at.
Mm-hmm. And so the last question is on the raw material side. I know, a lot has been discussed, but in terms of, going forward, which key raw materials, which we should keep track of, and where you see that the volatility could continue for longer, where, maybe some demand supply related issues might be there, which could be causing these, pricing things to pan out. And in terms of our discussions with the customers, how we are trying to mitigate it, maybe with the term of the contract or including something in the contract for the, variation to be included. So how we should, take it for the next couple of quarters?
Tough question. I can only say that these kind of volatility is happening after many, many years, and in the kind of the speed at which these changes are happening and the volume of changes are significant. We are not talking a few percentage, they're all changing 30-40%. So we are all battling with this. We have worked out certain strategies how we will address. For example, we don't take long-term contracts. We only take volume contracts. We don't take price contracts. We're trying to see how we can buy raw material with price contract. But again, there are suppliers who have gone under force majeure and refused to supply. So we're trying to hold some inventories. A whole lot of things are happening. But this is not a stable state. We must give it at least another 2-3 quarters when things will quieten down a bit. This is not normal and this will settle down.
Okay, sir. Fine, sir. Thanks a lot for taking my questions.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. As there are no further questions from the participants, I now hand the conference over to Ms. Bhumika Nair for closing comments.
Thank you very much, sir, for taking time out and answering all the questions.